Welcome to The Explainer. Today, we are peeling back the curtain on the tech that's, well, secretly powering your entire financial life.
So if you've ever used an app like Venmo or maybe Robinhood, you've almost definitely seen a screen that looks like this. It's that Plaid login portal. You punch in your bank password and then boom, like magic, your accounts are all linked up.
But here's the thing, what's really happening there? You're not just logging in, you're actually tapping into this huge invisible system, an architecture really, that has totally changed the game for how we deal with our money. So yeah, let's dig into what that actually means.
And look, all this convenience, it's amazing. It's super powerful. But it also brings up a really big question, right? Is all this invisible tech actually helping us? Or is it kinda, I don't know, quietly nudging us into making some bad financial moves?
Okay, first things first. To really get the impact here, we have to talk about just how massive this technology is. It's everywhere.
I mean, look at these apps. We're talking about Plaid being the middleman for more than 12,000 different banks and apps. A lot of these you probably use every single day, for everything from sending cash to a friend to managing your investments. Get this, almost 1 out of every 4 adults in the entire US has used Plaid to connect their bank account. That's huge.
So, okay, if the tech is basically invisible, how does that mess with our heads? What's the psychological effect of all this?
Well, researchers actually have a name for this whole thing. They call it spendception. It's a pretty cool term, right? And the idea is simple. Because digital money doesn't feel real, it's not tangible like cash, we just don't feel that same pushback when we go to spend it.
And this is where it gets really interesting. Just think about it for a second. When you hand over physical cash, you feel it. It triggers what psychologists call the pain of paying. It's real. But a tap, a click, that's totally frictionless. It's detached. And because of that, it's just so much easier to spend without really feeling the hit to your wallet.
So what's happening behind the scenes? How does this invisible connection actually work?
It's actually a pretty straightforward 3-step deal. Plaid is basically just a secure bridge. So you pick your bank, you log in through their secure little window, and then you give permission. The key thing to remember is that the app you're using, it never sees your bank password. Plaid handles all that secure stuff in the middle. Okay, so what info are you handing over? Well, it's usually your basic account info, your transaction history, that kind of stuff. But, and this is super important, you're in control. You have to authorize it first, and you can always go into Plaid's portal later and manage those connections or just, disconnect them completely.
And this right here, this is the real heart of the issue. It's this central tension. Because all of this seamless, beautiful automation, well, it's a classic double-edged sword. It can help you, but it can also hurt you.
Let's talk about the faux side for a minute. The risks are real. The average cost for just one data breach in finance, it's over $6 million. That is a staggering amount of money, and it's a huge reminder of just how valuable and vulnerable all this data really is.
And another risk? High fees. They're like a silent killer for your wealth. Think about this. Less than 1% of actively managed funds, where a person is picking stocks for you, actually manage to beat the market over a 30-year span. So with some of these automated systems, you could be paying way more in fees for results that are actually worse, and you might not even know it's happening.
Okay, but that's the scary stuff. Let's flip this around and talk about the friend side. Because we can take this exact same automation and use it for good. That's what behavioral economists like Richard Thaler and Shlomo Bernardi have been saying. They argue that if we just change the system, if we make the smart choice, the default choice, we can get way, way better results.
And here's the proof. In their program, which they called Save More Tomorrow, they automatically increased how much people were saving over time. And the results? Unbelievable. Employees nearly quadrupled their savings rates. They went from saving 3.5% to almost 14% in less than 4 years. That is the power of using automation for good.
So what's the big takeaway here? It's not about being scared of this technology. It's about mastering it. It's about making this invisible architecture work for you, not against you. And here's how you can do it.
Okay, so how do we actually do that? Well, the research points to 4 key things. You want a system that makes saving the default option the path of least resistance. We're talking auto-enrollment, auto-investment, and auto-escalation. When you set it up like that, you literally turn laziness, inertia, into your own financial superpower.
And this applies to investing too. You've got a choice. You can go with a traditional advisor who charges, say, 1% or more to try and beat the market, or you can use an automated robo-advisor.
They use a passive strategy for a tiny fraction of the cost, which means way more of your money stays in your pocket working for you.
So, we come back to the big question. As our money gets more and more invisible, is that a superpower or is it a vulnerability? And you know what? The answer is, it's up to you. Once you understand how these hidden systems work, you can stop being just a passive user and start being the architect of your own financial future. The choice really is yours.